Okay, so we're going to go ahead and get started. Hope you guys are doing well. Can you guys see my presentation screen, or do you still see me?
Your presentation.
All right. All right, so what I'm going to do is just kind of walk through with you guys a little bit about, what the market looks like right now and what we're seeing, from our standpoint. And then my goal with everything is to, I don't want to get there yet. Goal with everything is to make sure that, let's see here. Why did it just do that? Are you guys still seeing my screen? Okay. All right. So what we're going to do is just kind of run through this. And then when we get towards the end, if you guys have any questions, if you got questions, you want to put them into the chat, we can definitely kind of address those. But this, this, I guess you would say this economy this year has been like no other, really. It's been it started out great. The economy was doing phenomenal, and then it came to a screeching halt. It came to a halt with the economy in general. It came to a halt with things that affect the real estate market. And let's see. I got a message that is everybody hear me okay?
Yes.
Okay. All right. Somebody said they couldn't hear, so so everything really came to a halt. And if you can actually see on the bottom right hand of the screen, you see how the market was doing. The market was doing really well in the real estate market. And then this is like the second week of March. And this is where, from the second week of March until really today, there's been about a 16%, almost 17% drop in the real estate. And I don't want it to scare you guys. What I want is to just educate you guys on where we're going, and I want to make sure that you guys are prepared in everything that you do. So what are you guys seeing, I guess, and you can unmute yourself, and pipe in, but what are you guys seeing from a market standpoint so far, over the last month or two?
Busy, not slowing down.
Not slowing down?
Been busier the past 2 months than I've been all year.
That's good.
Now, good night.
Our clients have, just many of our clients have decided just kind of sit and tight and wait. But we have, the other half are moving forward. So, we're still working, but just not busy.
Yeah. What are you guys seeing from a lender standpoint? Anything different from a lender standpoint that you guys are running into?
I've talked to a few lenders, and they're still rolling out, still being able to close on certain loans. It's just that the conditions are having to be just a little bit more. I guess, as far as like debt to come ratio and credit score and job wise stuff like that.
Yeah, absolutely. I've definitely noticed that. So, we'll kind of talk about that in here. So, 2020, is a year really to remember. I mean, it's something that we're going to be talking about for, the rest of our lives, and probably our kids are going to be talking about it. I know mine are definitely going to be talking about it because I am not a teacher, and trying to teach them has been very interesting. So let's jump in. So it's either going to be a year to remember, or it's going to be a year to forget. And a lot of people are going to say, you know what, I want this year to be a year that just doesn't come back for me. That's not what I want for you guys. What I want for you guys is this to be a year of opportunity, to really adjust in what you do in your business. So here's what I've kind of found just doing a little bit of research on what the news is saying about 2020 in the real estate market. And they always, obviously, a lot of the news channels are going to create this hype, they're going to create this fear, but this is what is going to drive the consumer, not so much the real estate agent, but the consumer. And I want you guys to be aware of it. So this came out from Zillow saying that home prices could fall as much as 4% because of the pandemic. Fannie Mae, which is one of the government loan entities, says that home prices will decline by 15% in 2020. But they're not sure what's going to happen to the property prices. And then another one said that home sales could fall as much as 35% as the coronavirus stalls spring housing market. We're in I guess a position in a place within the country that we may not see some of this. But here's what you got to understand is that if we're not seeing it now, we may see it later on. So you got to kind of keep an eye on what's going on across the world, what's going on across the United States. And so what we're going to talk about today is how to shift your business, how to shift and really pivot your business to what is now a completely different way of doing real estate and a completely different market. And I don't want you to get caught up. A couple of you guys said that things are just really busy, doing really well. Be careful with that, because there's always going to be a time when it's going to change, and I'll show you here in a minute why. So really in 2020, a couple things I want you guys to think about and look at is it's really time to sit down and look at your business as a whole and get back to the basics. It is now time to restructure your business plan, because there's going to be some things that just are not going to work anymore. You're going to see, a dramatic change in what has been anticipated over the last 5 to 6 years. People have been saying, "Oh, we're going to have a shift. We're going to have a shift. We're going to have a shift." Well, normally a shift comes somewhat slow. We were thrown into a shift on this one, very similar to 2008, except 2008 took about a year and a half for the market to shift. Just to kind of give you a perspective, 2008 took about a year and a half for the market to shift in a percentage standpoint of what our market has shifted in the last 90 days. So, just keep an eye on that. How you rethink, it's time to rethink how you handle your clients. Working with clients are going to look different. The way you get clients are going to look different. I don't know if you guys have been to any closings lately, but I hear they're kind of interesting. My wife and I actually closed on our house, and we did it in the parking lot of the attorney's office, which was quite interesting. They're doing drive-through closings. They're doing, one-off closings. The agents aren't allowed to come anymore. So things on how the market or how the client procedures are going has definitely changed as well. I always say this, but it's time to start researching what other markets are doing and watching markets, because there are markets that are across the United States that will be indicators for our market. If you're looking at Dallas, if you're looking at Seattle, if you're looking at Denver, Colorado, if you're looking at, Miami and several other big markets, Orlando, Atlanta, Charlotte even. Those markets are going to shift before we do. And they already have, and they've been shifting for a little while. So you want to keep an eye on what's going on in those markets and what's happening in that area. The next thing is it's time to open up your KV Core. It is time to get back to reaching out to your clients on a daily and weekly basis. It's time to call your friends and family. And it's really time just to check on to see how they're doing. Right now, with the way that this virus is, it would be a great time for you to pick up the phone and just call your past clients, call your friends and family and say, hey, I hope you're doing well. Especially for your past clients, that's going to mean a tremendous amount. And just to make sure that you guys are staying on top of your clients is going to be really important. Because things are changing in how people are selling houses and things are changing in how people are buying houses. And we'll kind of talk about that a little bit. We're now moving into an equal opportunity, right? So this is what I consider an equal opportunity time frame, but it's going to be an unequal reward business. And what I mean by that is, I'm sure you guys have heard the 80-20 rule. 20% of the agents in the real estate market will in the next couple of years take 80% of the business, if not more. You're going to see a lot of people shifting out of real estate. You're going to see a lot of people that got into real estate that thought it was easy. Now they're going to be getting out because they're going to learn that it's not easy. So what I want to do today is really just talk about restructuring your business. And we're going to do that in 6 steps. So what I put together was kind of 6 steps to successfully pivoting your business over the next few months and over the next few years. Number 1 is going to be pivoting your business plan. Okay. One of the things that we really have to change is our mindset. And what I mean by our mindset is, over the last 4 or 5 years, real estate's been really easy. Real estate's been easy because there's been a massive amount of buyers that are wanting to buy. There's been a lot of sellers that are wanting to sell. There's been a lot of for sale by owners. There's been a lot of, just people hopping on the internet and saying, hey, I want to go see this house. So, it's something to definitely, keep an eye on. So I want to, just make sure that the mindset of our agents is really changing there. So hold on one second. Let's see something here. So when you guys are, let me see, are you guys seeing my screen? Because they're saying that you're not seeing it.
I see it, but it's the same slide, the first slide.
How about now?
There we go.
Oh, okay. All right. Sorry about that, guys.
Still scrolling.
All right. Let's get back to it. Sorry about that. It paused it for a second. So we're looking at pivoting our business and pivoting our business plan. And number 2, what we're going to talk about is remargining your business. Now is the time to cut expenses. Now is the time to save as much as you can. Now is the time to also look at where you want to take your business and really start preparing for that, because the opportunity that's coming for you guys is enormous, and it's something that really none of us have had the opportunity to experience unless you've been in the business for 15 to 20 years. And it's something that's going to be really exciting, but it's also something that's going to be really challenging to some agents. So then we're going to talk about finding the motivated and getting to the table, lead generation and conversion, and how lead generation really is going to go back to the basics, and some things that we're going to look at from a new standpoint. Pricing ahead of the market, seller pricing strategies, we're going to kind of run through that. Standing out from the competition. In order to survive in this market, you are going to have to stand out from the competition. And we're going to kind of walk through some strategies on doing that. And then the last thing we're going to talk about is master the market of the moment. Most of you guys have never worked foreclosures and short sales. Most of you guys have probably don't even know what the short sale process looks like. But I will tell you, short sales and foreclosures are coming back. There's a word floating around right now called forbearance that is going to absolutely kill the real estate market from a short sale and foreclosure standpoint. You're going to start seeing so many short sales and so many foreclosures, and the government keeps pushing this forbearance. Banks are pushing it, but they're not telling the ramifications of what actually is going to happen when this forbearance is up. And so we're going to kind of talk about forbearance here in a minute. But what I want to do first is really just talk about pivoting your business, right? So for years, the market has been incredible. Really since 2017, the Greenville and the upstate market has been in a seller's market. And what we mean by a seller's market is anything really under 60 days. So if the market stopped, if there was no more homes listed on the market, it would take roughly 60 days to exhaust the entire market. So in a seller's market, obviously there's going to be an advantage for the seller. There's going to be a lot of buyers that are out there, and there's going to be a lot of sellers that are out there. And so the sellers have the advantage in the seller's market. Obviously, they're going to be getting more money. And a lot of people think that pricing it high, pricing it a little bit more, they're going to get offers. And a lot of times they do. But they also price it right or price it low, and they're getting multiple offers. That is definitely changing, and that's changing very quickly. You're going to need to learn how to change and educate your clients on that. So one of the things that, and I actually have this on my computer and on my laptop, and it's something that I read in a book, and it makes complete sense, and it's discipline equals freedom. No matter what you do in your life, if you're disciplined at it, it will cause freedom in some other aspect. So in your business, if you establish discipline in your business and you are disciplined in your finances, you're disciplined in your lead generation, you're disciplined in how your processes are, and you really run it like a business, you're going to see freedom, and you're going to see financial freedom, and you're going to do very well in this business. If you choose not to have discipline and you choose not to pivot your business at this time, unfortunately, you're probably not going to be in the business over the next couple of years. Another thing I heard that I thought was pretty good was decide what your priorities are and how much time you'll spend on them. If you don't, somebody else will. That is key in your lead generation business. So if your priority in your real estate business, if one of your main priorities is not lead generating, guess what? Somebody else is, and they're going to take that business from you. So I want you guys to kind of keep that in the back of your head, is that, that now is going to be completely different going forward on how I'm going to get business and how important my business is to make sure that nobody else takes it. We are now transitioning from a relationship business, so to say, to a transactional business, but we want to bring it back to that relationship business, and only you can do that. So let's talk buyers versus seller business. So one of the biggest things that I want you to constantly think about is studying your market. You really need to know what your market looks like and what is moving in your market, what price points are moving in your market. And a lot of people the last couple of years have focused on the quick business. The quick business in real estate will always be the buyers. However, now is a time where you really, if I can emphasize it, you really need to focus is on the listing side of your business. Sellers are going to be your long-term business, and sellers will always bring you buyers. So what I would like to see our business shift from, because the last couple of years, Impact Realty Group has been predominantly a buyer-focused business. We've been at about 70 to 75% of our business from you guys have come from buyers, and we really need to shift that into a 50-50 or a 60-40 on a seller side business. And really what I want to do over these next couple of months is work with you guys and focus on how to become a 10%er. How do you become and hold 10% of the listings in the MLS? And as a brokerage, how do we become a 10%er? Because if we can hold 10% of the listings and we can hold 10% of the business, you guys will have more buyers than you can ever want and ever think of. You got to be a local expert to do that, though. So you've got to also shift your mindset from becoming a sales agent to becoming an educator. And I think now is probably one of the most important times in real estate to become that educator in our business, because we have to tell people what is going on in real estate right now. The next thing is you're going to have to learn some new techniques. You're going to have to learn something new. If you're not learning something new, you're never going to grow your business. So talking about some different lead generation techniques is going to be really important. And we're going to kind of walk through that. This has always been interesting to me. So the law of equilibrium. The law of equilibrium is really as old, if not older, than the real estate industry. And it's simple, straightforward. It states that the available income in a market determines the number of agents. Okay, so the available income in a market determines the number of agents. But conversely, when the number of available transactions fall, so do the agents. So when the market shifts, you're going to see a decline in agents. People are attracted to our industry, one, because it's easy to get into, and two, because unfortunately, television and the media have perceived as this is an easy job with a massive amount of income opportunities. But the reality of it is this is a hard job, and you got to be really competitive in this job to do really well. So just kind of keep that in mind. Step two, what we're going to talk about is remargining your business, right? So what I want you guys to just nail into your head is you really need to sit down and look at your business. Where are you putting your money? Most agents, and this is where I want to kind of see, I want to help you guys to get out of this mindset. Most agents, when they take a commission, they take the commission and that's it. They take the commission and they're spending it immediately. They're not saving it. They're not putting it back into their business. They live from commission to commission. And really, with remargining your business, the number one determinant in thriving in real estate is lead generating. But the number one determinant in surviving in real estate is your expense management. And so what we're going to kind of talk about is making sure that you guys are analyzing your expenses daily, and make sure that you're analyzing them weekly, and make sure that you actually are running it like a business. In saying that, this is what I want to kind of show you guys. So I took this from somebody that runs a massive real estate business. He owns multiple businesses, and this is kind of what his buckets, so to say, look like within his business. And whether you're a single real estate agent, whether you run a team, or whether it's the brokerage that we run, this is what you guys should be thinking about. And obviously, and unfortunately, we don't have a choice. We have to pay taxes. There's a lot that you can do within real estate to offset that as far as the expenses goes. But my suggestion is if you have an account, a checking account that is designated just for real estate, and I don't want to say that you're not very good with management of funds, but you can handle it a little bit. or if you're just not good with it, my suggestion is to open up a couple of different savings accounts and start spreading your money out, creating different buckets, creating buckets for taxes. Right now, most of the time, if you guys have heard of Dave Ramsey and a couple of the other financial guys, most of them will say, from a business standpoint, from a personal standpoint, we would like you to put away 3, 4, 5, maybe even 6 months in expenses. I'm suggesting the way that the market is right now, because with this virus, you don't know what the next 6 months are going to look like. As much as you can put away right now, if you don't have 6 months of personal and business expenses, my suggestion is that you guys put that amount away and do whatever you've got to do to get that savings built up and get it built up very quickly. That is going to be difficult to do, and that is going to take a lot of discipline, but that discipline will give you freedom in the months that, if the market changes again and it goes down, or if we shut down again in the fall, if we shut down in the wintertime, nobody really knows right now, but if we shut down, that'll give you the freedom to not be stressed on, am I going to be able to pay my mortgage? Am I going to be able to pay, my expenses? Am I going to be able to keep and maintain my real estate business? Bucket 3 is you need to be putting money and investing money into your business to grow your business. Most agents, again, they take the commission check, they put it in their checking account, and that's it. They don't have a fund for marketing. They don't have a fund for lead generation. They don't have a fund for acquisition of clients. If you can find me a business that's out there that runs without having a fund of acquisition of clients and does it successfully, you probably should go talk to that business, because there's not any of them out there. If you look at from a business standpoint, businesses put away money for acquisition, for marketing, for branding, for different things. So you guys got to kind of remember that don't take all of your money from your check. You do have to take some. You've got to be able to pay your bills. My suggestion right now, and I would say this is for the next ever how many months that, well, not even want to say that. This is how, if you're going to remargin your business, and this is how, if you're going to reshape your business and your life in general, then really you should be taking income to the point where you're paying your bills off. You really should be taking just enough income to pay your bills and then focusing the rest of it on savings, the business expenses. And the next one, I will tell you that more people in the next couple of years, the next 2 to 3 years, will become wealthy, and you're going to see more and more people become super wealthy because of the downturn. More people become wealthy in a downturn than any other time in history. And I know we're all, a lot of times we're all focused on the next deal, the next real estate deal, the next, transaction. It does not take a lot of money to be able to start investing in real estate. And there's deals that come across your table every single day that if you had $5,000 or $10,000, you could turn that $5,000 or $10,000 into $100,000 easy. So start putting a little bit away. Start thinking about a retirement. Start thinking about, what does my investment future look like? So that's just kind of remargining your business. I want you guys to, to look at that, kind of keep that in mind. Before we go, I'm going to kind of unmute everybody. Does anybody have any questions or comments on what we talked about?
Yes.
Okay, go ahead.
Yeah. Can you display percentages for optimum percentages for each bucket? If you'd say, for example, like lead generation, how much would you put?
Yeah. So what I would suggest is 15 to 20% from a lead generation standpoint.
Wow.
That would give you enough to be able to build that up on a monthly basis and keep it consistent. Now, obviously, the more business you start doing, the more that you're going to want to feed into that, and the bigger that you're going to want to grow.
Would one of the things like business expenses you mentioned, lead generation. So would you consider the 15 or to 20% that you mentioned overall business expenses?
Yeah.
Okay.
Yeah. So marketing.
So if you have some, you hire somebody for specific, or you pay for something, vendors or whatever, right? Is that what you're
Yes.
talking? Okay.
Yeah. So with those, what I would say would be that they need to be bringing money to you, right? So what I mean by that is they need to be bringing in. If you are paying somebody to do a job for you, if you're paying a vendor, those people or those vendors or those companies or those systems should be bringing in more than what you are expensing out. You want it to be an investment. You don't want it to be an expense, if that makes sense. So you want to be able to pay for something like that, but you also don't want to pay for it and it not give you something in return. Does that make sense?
Yeah, got you. Yeah, that makes sense. Yeah.
Okay. Any other questions? All right, let's move forward. Okay, number 3, finding the motivated and getting them to the table. If you have not been pre-qualifying, now is probably the most important time to pre-qualify somebody. And what I mean by that is you're going to have to go above and beyond what you've normally done. You've normally, you get a client that calls in, you probably have said, hey, let's meet, I'll get you with the lender, let's see, if you can get pre-qualified. Couple of things you're going to need to start asking kind of in the beginning to pre-qualify for yourself before you ever get to that point is you're going to need to, one, make sure that they still have a job, because what we're seeing is that a lot of people are furloughed and they still have a position, but they don't have a job right now. And if they don't have a job currently and there's no income coming in from their job, they can't get a loan. They are literally pulling the verification of employment the day of closing. So making sure that you guys are pre-qualifying, making sure that the people that you are talking to are motivated and are ready to move. So if you get somebody right now that has kind of a credit score that would have been okay back, 5-6 months ago, most likely that's not going to be okay today. So making sure that you guys are on top of the lending side of things is really important right now. But making sure that you're finding just the clients that you need to work with. And what I mean by that is whether it be sellers, whether it be buyers, there's a lot of people that may be looking or searching that may not be able to qualify. Put them on some sort of campaign, put them on a search for homes, but don't spend a whole lot of time. You need to be focusing on what's bringing you money, because right now, the more that you can bring in, the better off you're going to be in the next 6 to 8, 12 months. The next thing you need to do is find a new source of lead generation. So the same source that you guys have been using, if it's your friends, if it's your family, if it's, Facebook, if it's just social media, find something that you haven't been doing. And what we were talking about earlier is shifting from a buyer-focused career to more of a balanced career. So you're going to need to go after sellers. You're going to need to forget about the fact that you don't like doing something And in order to survive in the business, you're gonna have to do something. And so whether that be, whether that be calling for sale by owners, calling expireds, visiting them, doing landing pages, reaching out to your sphere of influence, you should be doing all of those right now and doing those so much more than you had before. I put a couple of things on here just as examples. RedX, Mojo, and Vulcan 7 are all lead generation companies that are focused around prospecting. Prospecting over the last couple of years has been a lot more difficult because there wasn't hardly any expireds on the market, and there was a whole lot of for sale by owners, but those for sale by owners went really quick. We're starting to see every single day more and more expireds and more withdrawals coming on the market. That is a massive target that you guys could go after. When I first started out in real estate, I've told a bunch of you guys this before. When I first started out in real estate, the average day on market was about 200 days, and there was 25 to 50 expireds a day coming on the market. That's how I built my entire business, and it's going back to that. So if anybody says that, that they want to change their business and they want to be able to get ahead of where we're going, I'm going to be honest with you, and I'm going to tell you that you need to get on the phone and you need to get back to getting in front of people, because if you're not, somebody else is. And there are companies out there right now that are going to get in front of them via the internet way faster than you are. So you've got to get in front of them via the phone and get in person in front of them before these other companies do get in front of them. Landing pages are great. Facebook ads are great. What's my home worth, market analysis, those type of things are really good right now because people are curious. People want to know, is my house worth less? Is it going to be worth more in a couple of months? So just making sure that, that you guys are focusing on the lead gen side. Follow-up is super important. You got to follow up. We talked about this a little bit before. There's what we call the instant buyer, the internet buyer, the iBuyer, whatever you want to call it now. It has come into our new generation of real estate. You're going to see big companies that are going to be coming in and they're going to be buying up houses. They're going to be offering sellers that normally would have sold their house on the market. They're going to be selling off market to these companies, and these companies are going to be flipping and making money and, just putting them back on the market themselves. These are opportunities that they're going to take because they're internet based, that you could get ahead of them. And there are opportunities for you to get ahead of them and sell the house to these companies, but you've got to get in front of them first. We're probably going to do a webinar on that here soon, just to kind of give you an idea what those companies look like and how to get in front of them. Education right now is probably the most important thing you can be doing with your clients. More transactions will fall apart in the next year than most of you guys have seen in your career, and it's because of the lack of education. You have to educate the client on the way that real estate is today, even if they sold a house a year ago. They don't know what it's looking like today. They don't know what it takes to get their home sold today. They're in a different market a year ago than they were today. So you got to educate them. Study the process, study what's changing, stay ahead of what's changing. Inman News is a great one to look at. National Association of Realtors is another great one to look at. Those are all, both of them are keeping agents and keeping brokerages on top of what's going on across the country, but times are definitely changing. So when times change, you have to change how you sell homes. Really, if you're pricing a home and you're selling a home, you've got to price them different. So kind of ask you guys these questions. So if you want to unmute yourself and answer, in a seller's market, what's the best way to price a home? Is it to price it above the market, at the market, below the market? What would you guys say would be the best way to price a home?
I always price it at.
Okay. How about a flat market?
At the marketplace.
How about a buyer's market?
I like to price it a bit lower, a
Okay.
tad,
All right.
so this way I can get multiple offers, and then
Yeah.
it will turn into a better deal.
Okay. So the best way to price in all of these three strategies is a price ahead of the market. Okay. And I'll tell you why. In a seller's market, if you price it ahead of the market, 9.9 times out of 10, it's going to end up in multiple offers. There's a reason that you see agents that are putting things on Facebook that say, oh, I received 10 offers in 12 hours, or I received 8 offers in 12 hours. That's because they're pricing it ahead of the market. In a flat market, if the market is flat, why would you want to be where everybody else is pricing it? Why would you want to put your house in the same price as everybody else and compete with the same competition and may or may not get the price that you want? But if you put yourself ahead of that person, you put yourself ahead of those 5, 10, 15 other homes, everybody's going to flock to you, and most likely, even in a flat market, you're going to come in with more offers. In a buyer's market, it's an absolute must. In a buyer's market, you cannot overprice a home. The reason we used to see 25 to 50 expireds every single day was because agents were out there overpricing homes. The ones that sold always priced ahead of the market. And always, and when I say ahead of the market, I'm not talking $15,000, $20,000, $30,000 ahead of the market. What I'm saying is, look at what's selling in the area, and then, based off of what's selling in the area, you probably want to be on the lower end of that margin and the lower end of that range to be competitive. So this is my pricing strategy, and this is something that when I've done listings, that I have always used. And this is a pricing strategy that the National Association of Realtors put out several years back. And it's based off of a massive amount of study in both a buyer's market and the seller's market. In both markets, what we know is that if we price a house right, we're going to get offers, and we're going to get them within those first 2 to 3 weeks. Even in a buyer's market, if we price it right, it will sell. If we have 5, 7 plus showings, right? We have that in a 2-week period, and we're not getting the offers, we just having a lot of showings, we know we're about 4 to 6% off. We know that based off of that, we need to adjust, and you need to adjust quicker than waiting it out, right? The longer you wait it out, the longer it's just going to sit there, and the more stale it's going to become on the market. The other thing is that if you have 1 to 3 showings in a 2-week period or a 30-day window even, you're about 6 to 10% off. And if you've got just lookers or drive-bys, and what I mean by drive-bys is people are just driving by, or they're just driving through the internet and they're not even stopping at yours, they're usually about 10+% off. There's only 2 things that are going to cause a house to sell, and it's pricing and the condition of the home. And really 3: pricing, condition, and the presentation of the home. So keep this in mind. Make sure you guys have this when you're sitting down with the client talking about the education process. You need to educate them on this. You need to let them know that they have this is where we're looking at. Great question. Somebody just asked. It says if the seller decided to get the home appraised before the listing, still price it under the appraised value to get multiple offers? In my opinion, yes. And here's why. Is an appraisal is an opinion of an appraiser, right? They're giving it based off of multiple things in a market. And what they're doing is they're taking an exact dollar amount instead of a range. And I will be honest with you, I've had multiple pre-listing appraisals, and and this is where it can be a little frustrating for the client, is for them to understand that somebody may not offer them that appraised value. They may not offer what the appraised value is from a pre-listing appraisal. So they have to, you know, when an appraiser comes in, they're not giving you a range, they're giving you an exact dollar amount, but they're using their strategy is based off a range. So they're taking a bunch of different ones, and they may be putting you at the top end, they may be putting you in the middle, they may be putting you on the low end. But I would look at that appraisal, and most likely I would be at or below that appraised value, just because of the area. I mean, obviously, if it's, you know, if it's a unique house or something, I would always just educate the buyer, or educate the seller, that they, you know, they may have an appraisal, but somebody may not offer them an appraised value, because the value, really the definition of value, is what somebody's willing to offer and what somebody is willing to take. And so that's what you want to kind of keep that in mind. But great question there on that one. So the next thing you want to do is you got to stand out from the competition. Please, 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 please do not take your own photos, and understand the importance of staging. When you take your own photos, you can tell very quickly when somebody takes their own photos, especially online, because they're much darker than they would be on, you know, a normal, when somebody professionally does it. That 20%, that 15 to 20% that I was telling you guys about earlier, when it comes to putting money away for lead generation and for your business expenses, that is part of that business expense. That professional photography will get you to the closing table, and that, you know, that staging or virtual staging will get you to the closing table so much faster, and will bring you more money so much faster than actually not doing it. So you've got to stand out from the competition in that way. The other way that you're going to have to stand out from the competition is starting to do more videos. We're become a video society, really. You look at, you know, you look at YouTube, you look at some of the social media platforms that are coming out. It's, you know, TikTok. I mean, I'm not really on it, don't really know a whole lot about it yet, but TikTok is completely video based. So we're going to a complete video based, you know, society where you're going to have to do this to stand out. One of two ways you can do that. You can either hire a professional photographer to do it that does videos, or there's some apps that are out there that will allow you to do the videos. The videos are a little bit different than the photos, because, you know, you get a little bit more of a real perspective of it. Whereas on the photos, you know, they lighten it up a little bit. They make it look a little bit brighter. The video, it may show, you know, some contrasting colors and be a little bit darker. One of the great things that you guys have access to is, you know, if you have a Zillow profile, is creating that profile and using their 3D tour. There's some great tools on there. You can do the 3D tour, or you can just do a regular video. You can do it right from your phone. The 3D tour will actually upload straight to your listing once it goes live. Or if you do it after it goes live, you do it within the first week, it'll upload in there. Zillow, being the most trafficked website in the world, recognizes those videos and actually puts all of the video clips and the video listings at the top over everybody else. So make sure you guys are you know, using those tools. Make sure you guys are standing out in the market and everything that you do. All right, so the next thing that I want to kind of talk about, and we're going to wrap this up here in a second because I think we're coming up on an hour, and I don't want to keep you guys anymore. Hope this was definitely informative for you guys. But the next thing is mastering the market of the moment. The short sale and the foreclosures will return. They will be back, and they will be back in a vengeance. And there's been a lot of agents that decided that, hey, I'm going to take this opportunity as it comes, and I'm going to learn how to work these. And they made an absolute fortune in the last downturn. And they did. Short sales do take a good amount of time from the back end standpoint, but they are very easy to obtain if you are a short sale agent. If you brand yourself as, hey, I'm knowledgeable in the short sales, I've done training, there's even certifications out there now, because there are not a lot of agents that are out there that will take the time to educate themselves, that will take the time to learn this process. And because of that, there are specialists that will become, very wealthy in our market and very wealthy everywhere. That this is a pie, a portion of the pie in real estate that you could take and you could run with it. So here I put on here and just so you guys know, I'm going to put this on Facebook so you guys can go back and look through it. If you want the slides, I can send you the slides. But there's a link here that NAR has. There's a designation that you can go through. There's a lot of training you can do. I would highly recommend looking into this, and I would love to see several of our agents jump on the short sale train, really, because it's going to be a train and it's going to come in quick. And you really need to go ahead and prepare yourself now to know how to work these when they do get here. And the reason that they're coming is because of this word right here, forbearance. Forbearance, essentially, I'm just going to kind of read you what a definition of it is. It provides temporary relief by allowing you to make lower monthly payments or no payment at all for a specific time period. It generally requested by the homeowner dealing with an event that impacts their ability to pay their mortgage, like a job loss, natural disaster, or major illness. Here's what it is not. And this is where people think that it is, and it's not. It is not a grant. It is not a, I'm not going to have to pay the bank back. Unfortunately, our government and the banks have decided that they're allowing forbearance of loans through the end of this year. Here's what's going to happen is those people, at the end of this forbearance, that skipped amount, you're still getting interest on that skipped amount. And when the forbearance period ends, you have to pay the lender back what you didn't pay. So your monthly payment that you were struggling at $800 or $1,000 just went up to $1,300. It just went up to $1,400 because now you skip payments, you have interest on those payments, and now you're going to have to do the same thing that the people in 2006 and 2007 that lost all their homes went through. They went through forbearance. A lot of them got to a point where they couldn't pay their mortgage. They went back to the banks and said, "Hey, can you give me a little relief? Can you give me this? Can you give me that?" And they said, "Sure, we can do that." Please, please, please talk to your clients. This is not a good thing. If you talk to somebody, understand that this is not something that they want to do. On the flip side, if you go to list a house, and this is why pre-qualifying a house or a seller is super important. If you go to pre-qualify a house and they're in forbearance, they cannot sell their house. They cannot close on that house until they catch up with the company, with the banking company, which if they don't have enough equity, they can't use their closing funds to catch up. So you've got to make sure that they, one, either have enough equity, two, that they can catch up on their forbearance, and it cannot be in forbearance at the time of closing. So, this is something that you guys want to educate yourself on. This is something you want to educate your clients on. Just make sure that if you get into this scenario with some clients, tell them to be very careful with it. This is what is going to cause the short sale and foreclosure market. This is what's going to really cause our market to shift over the next couple months. Last thing, and then we're done, is in real estate and in our world in general, we know one thing is that perception tends to trail behind reality. The perception right now is the market's doing, the market's down a little bit, but it's still doing really well. The reality is that we have two different periods in time. There's an up lag and there's a down lag. The down lag is where we're going. The low point, right, of the real estate agent's career, and the low point of the down lag is when income opportunities, the low point of income opportunities occurs when most agents are chasing the least amount of income. So this whole thing we've been talking about shifting your focus, shifting your mindset, we are heading in that down lag. The down lag occurs because the number of agents doesn't decline until the number of transactions have already dropped. Okay. So when the number of agents realize that the competition is much greater and much greater and much greater, things are going to get a lot harder. It's going to be a lot harder to go out and get a buyer. It's going to be a lot harder to go out and get a seller. So if you get ahead of this down lag and you get ahead of the remainder of this year and the remainder of next year and the next year, you're going to be perfectly fine. If you live in perception that everything's going to be great, I don't want to say that you're not going to be here, but the reality is that a good majority of agents are going to get out. We had about 2,500 agents when I got into real estate. Now we're at about 6,000. We're going to see a good 2,000 plus agents get out of real estate in the next couple of years. I don't want that to be you. I want you to understand that we're here for you. We're here to help you. We're here to make sure that you don't get into that point where you realize that the income is not there, that the opportunity that you've been chasing is not there anymore, and that you're actually going to have to work, but you're doing it too late. You're realizing that you're 6 months too late, you're 2 months too late, you're 30 days too late, and you just can't do it anymore. So, I want to, take this year and really focus on the listing side of the business, focus on, making sure you guys are setting up that you're shifting your mindset. And I hope, 2 years from now, a year from now, that we're all sitting here together and we're all, rejoicing over how well everyone did, and that every one of your business grows during this time and it doesn't actually go down. So kind of open it up from some questions here just real quick, and then we will wrap this up. But I appreciate everybody, coming today. One question that did pop up is, are we heading towards a lower commission norm? We've been heading towards a lower commission norm for several years, and I want you guys to understand and know that is coming. That is reality. If you study the markets, if you look at markets in other areas, the average listing commission and the average buyer commission right now is about 2 to 2.25%. It's coming our way. There's brokerages that are coming our way that are changing these things. So take that into consideration when you are you're out there and you are competing against other people. Don't sell yourself short. Sell yourself to a point where they understand why you are a 3% agent or a 2.5% agent or a 3.5% agent, and provide them with the ability and the tools that they need to make that decision. Educate them on why they need to go with you versus going with a lower commission company. There are going to be some times that you are going to have to potentially adjust your commission. That's why we chose the structure we did. That's why we have a brokerage where you're not paying 30, 40, 50% to your broker. It's very hard to do that and stay competitive in this market, and it's going to get even harder. It's going to get so much harder when the competition gets so much greater, and you as an agent may be able to say, well, you know what, I don't pay 30% to my company, 40% to my company. I can give back to and be a little more competitive to our client versus somebody at another brokerage that's paying that high amount. And they say, you know what, I can't do that. I don't have the ability because now I'm paying 30% to my company, and then I got to go pay, this and this and this, and then I'm not making any money. So I saw that coming. I've seen that coming for years. So just know that, yes, there is going to be a change over the next, and it's going to be a slow change, but there will be a change over the next couple of years in our commission structure. So any other questions?
Yeah. What'd you do? Give me a call.
Anybody got any questions? All right.
You gonna share
So,
these slides?
so what we're going to do is just wrap it up. I will share this with everybody, and I hope that it was definitely informative for you guys. This is the very last thing, and we're going to hop off. 2020 is your opportunity to propel your business. The choice is yours, and it really is yours alone. So rethink, rework, excel. You got this. Okay. You guys have what it takes. We're here to back you. We're here to support you. At the end of the day, your discipline is going to equal your freedom. So appreciate it, you guys. I definitely don't want to take any more of your time. And if you have any questions, feel free to reach out to me. I'm hoping to do a lot more of these over the next couple of months. So we've got a couple other trainings coming up this month. We're also hopefully planning, just so you guys know, we're hopefully planning kind of a Lake Day event sometime next month. So we'll kind of get everybody to come over to Clemson area. We'll grill out, we'll provide the food and everything, and we'll just have a good time. So hope your business is doing well. Stay safe, stay healthy, and we will talk to you guys soon.
Thank you.
Thanks, Justin.
Can we have more meetings like this more frequent?
Oh, yes, absolutely.
Like every week or so, every other week, possible?